Well, it's been a busy week. We had a presidential election, we had a Fed meeting, we had a rate cut, and I want to talk to you real quick about the rate cut. Everybody, I shouldn't say everybody. I've been seeing a lot of posts on social media that interest rates are dropping, and people tend to translate this as mortgage rates. So let me clear the air one more time. When the Fed cuts the Fed funds rate, this is a cut to the short term overnight rate that banks charge one another to borrow money. It does not directly impact mortgage rates. What it will impact is home equity loans and credit cards because they're tied to the prime rate, which is tied to the Fed funds rate. So did we see mortgage rates come down this week? No. On another point, I'm sorry to burst your bubble. We would love to see mortgage rates come down. They haven't. We're back up in the sevens again. So we do have more homes coming to market. Builders are still building. Builder inventory is pretty solid, or appears to be. With regards to foreclosures, I'm hearing a lot of rumbling about that too. What we see in the mortgage industry, the data that we have access to, show that there are fewer early payment defaults. That is usually a good indicator of foreclosures. Those are low. Foreclosure rate is low. All of these numbers are so much lower than anything that we saw, than the lowest of rates that we saw in the 2008, 2009, 2010 era. So very low rates there. We see that more homeowners own their homes outright, and home equity is highest it's been in, I don't know, whenever they started measuring it. It's enormous. So the concern for foreclosures is very small in the mortgage industry for the most part. Home buyer traffic, some people were expecting that because the Fed announced a rate cut and we have an election, so people are happy and excited, or at least half the population is, that we would see, like, I don't know, buyers lining up at open houses and ready to write contracts. I think it's going to take some time. I think it's going to take some time for people to get their arms around what their current situation is or may be in the coming year. But I will tell you that I saw a little piece of information. I'm having a look at the chart here real quick. The forecast for next year is that there will be a rise in home prices. It's small. It's forecast at an average of 2.5. The highest forecast is by Goldman Sachs at 4.4. The lowest is Moody's at 0.3. And then you've got everything in between. But at least we haven't flatlined. And hopefully, once we do start seeing rates come down, I think then we will see homebuyer activity, because we do know that there's a lot of people sitting on the sidelines. So I hope this information is helpful to you. If you want more information about the Fed funds rate, how it impacts or does not impact mortgage rates, and want to have a better understanding, just give me a ring. I'd love to hear from you.